Well, hello everyone, and welcome to Giga Metals Live Summit today, hosted by Six. I'm joined today by Mark Jarvis, Giga Metals CEO. Before we jump in, I want to remind you all that you can submit your questions at any time on the Q&A panel on the right-hand side of the screen, and we will make sure to get to them after the discussion. But just to kick things off, Mark, thank you so much for joining me today. What is the Lassonde Curve?
Well, the Lassonde Curve was something created by Pierre Lassonde, who was a famous, extremely successful Canadian mining stock investor. He was one of the founders of the company Franco-Nevada, which was the first royalty company in the mining business. And so he put this curve together just as a way to illustrate the various stages in the life cycle of a mining company and what that meant to investors. So first of all, you've got a junior company. You're looking for, looking for a discovery. You're looking for gold. You're looking for copper. Maybe you're looking for diamonds and you find nickel. But you're kind of looking away. Not much is happening. And then wait a minute. You drill a big hole. You've made a big discovery. Boy, is that exciting! And you don't know how big yet. You've only got one hole. Now you've got three holes. Looks like it could be real because the other holes are almost as good as the first hole, kind of thing, and the stock price just goes crazy. It's volatile. It goes up and down, gyrates around. Then you drill a lot more holes, and you start coming to grips with, okay, what do we really have here? What kind of deposit is this? How big is it? What's the average grade of the deposit? What's the geometry of the deposit? What's the metallurgy? How much of the metals can we recover? In a typical circuit, and you get into the more of the development stage, where you're really trying to figure out the deposit, how it's going to be mined, what rate it's going to be mined at, what it's all going to cost. What will the economics of this project look like at various metal prices and so forth? And this is what Pierre Lassonde referred to as the orphan period, because it's not as exciting as the discovery itself. It's just a lot of detailed work, both in resource definition, in metallurgy, and in engineering. And it takes a while. And there's not all these surprises that will drive a stock the way the exploration stage will do. So you can be in this orphan period for a long time. And then, it looks like now this project looks like it could be economic. It could be economic. It might even get built this market cycle. Now you're starting to attract institutional investors. You're starting to attract strategic investors. Now the stock starts getting interesting again from an investment perspective. And then eventually, you start up your mine. If you're one of the lucky few, you start up your mine. And then typically, in the first year after you start up the mine, the stock will slump again, because there's always hiccups when you're starting a mine. There's always, things that are not optimal, and it takes a while to kind of get the new mine tuned up and operating at full capacity. So there's usually a bit of a slump the first year after you start production, and then you start making earnings, and your earnings are driven by commodity prices. So you become linked to the underlying commodity price of what you're making. So that's the Lassonde Curve.
Right, thank you. And what stage of the Lassonde Curve is Giga Metals currently at?
Well, we're very much in the orphan period. We know what we've got. We've got a monstrously big deposit of low-grade, open-pittable nickel and cobalt in sulfides. We're working on resource definition drilling. We're working on metallurgy. We're working on engineering. We're trying to advance the engineering. Once we get this to the pre-feasibility level, which we're working on now, and we hope to have done by the end of next year, We'll be able to start the environmental assessment process. This is all that boring stuff that doesn't generate all these surprises. However, from my own perspective as an investor, it's a very interesting time because you're not hoping you find something, you've found it. And if you've done at least some initial work and you've got some sense of how the economics work and what kind of underlying commodity prices you need to make your project economic, well, you've got that exploration risk is behind you. And now, generally the stock is trading pretty cheap. And if it's looking like it's a project that could go forward, it can be an interesting time for an investor who's got patience. And the key is if you've got patience, because, you can find entry opportunities at this stage of the life cycle. But you don't know what the triggers will be for the next, moves in the stock. Like maybe there's going to be a strategic investor that becomes involved, which will, kind of validate the project. But you don't know when that's going to happen or if it's going to happen. So even if it does happen, typically the stock will react to that. But if you wait to buy it until that happens, now you're chasing it. Whereas if you had bought cheap and were patient, well, then when it happens, it's a surprise. It comes out of the blue, and suddenly, you're doing very well.
And so where do you think Giga Metals will be in the short term and then after 12 months?
Well, as I mentioned, we're working on advancing the engineering to the pre-feasibility level, but we're also very actively talking to potential strategic investors. And I think that is where we're at. Is this is a typical, well, not typical, but it's not an uncommon case where you've got a very small junior company with an extremely large deposit. And when you have that situation, it's challenging because every step of development is expensive. The larger the project, the more expensive each step of development is. So it's a double-edged sword. It's nice to have something big, but boy, it's expensive to develop it. So at some point, you really do want a strategic investor to get involved at the project level rather than endlessly diluting your stock to advance the project. And so we're at that stage. We're in discussions with end users, end users and traders and so forth. So and because of the electric vehicle revolution and the growing realization that you're going to need a lot of nickel for the batteries for the electric vehicles, we've got something that everybody wants. And so it's an interesting position to be in. I don't know, I can't guarantee that we're going to do a deal with a strategic. And if we do, I don't know when it's going to happen. But I can tell you we're at that stage where we're, in discussions, and I can report that there's real interest out there.
Great, thank you. And so as a company, which part of the Lassonde Curve do you think is most challenging?
Oh, absolutely. The stage that we're in, this orphan stage is very challenging. Although I guess the pre-discovery stage is pretty challenging too, because a lot of companies will toil away for years and years and never make a discovery. So I guess it would be those two stages.
What are the significant catalysts associated with the life cycle in the Lassonde Curve?
Well, first of all, discovery. So you've done your geophysics, your geochem, you're looking at, but generally it has to be a drill hole. So that's a very interesting stage. And then the interesting stage after that is, when you actually can see that this is likely a project that's going to get built this market cycle. That's a very interesting stage.
Thank you. And lastly, what should investors expect from Giga Metals in terms of catalysts that may move the company forward along the Lassonde Curve?
Well, I guess again the key thing is watch this space in terms of whether we can attract a strategic investor at the project level. I mean, from where we stand today, we think it's going to cost about $30 million to get us to the point where we're shovel ready, and that's a challenge. So we're looking to strategic investors to come along and help us get there by investing in the project. So we're offering a piece of the project for that money, and that would be an absolutely transformative event for our company if and when it happens.
Great, thank you so much. Now we're going to open the floor up to attendee questions. So if you do have a question, please feel free to submit them now, and we'll jump right in. Thanks so much. So we do have a question here. So Mark, with the recent upcoming technologies people use or will use for exploration, how long do you think the Lassonde Curve will still be relevant?
Oh, I think the Lassonde Curve will always be relevant. I mean, there's always new technology. Some of them are fascinating, but you still have to find the stuff, and it's not trivial. So.
All right, thank you. Yeah. So I guess my question is, what is make or break to get to the next step along the Lassonde Curve throughout?
What's the make or break for us? Well, again, to me, it's all about finding that strategic investor that's willing to come in at the project level. And the reason I keep stressing that is that the math works better for the shareholders that way. I mean, there's some strategic investors out there that go, well, why would I invest at the project level? I could just buy your whole company. And, fair enough. But, my reaction to that is go ahead and try. It's not as easy as you think. And a lot of the companies that we're talking to, that's not part of the equation for them. They're just looking at this strictly as a project. I just have to say I've been involved with this project since 2004, and it's been a long toil, but we're in a world right now where, because of the shifting demand for nickel, because that demand is growing so rapidly with lithium-ion batteries, we're in a position we've never been in before. It's not just something that they want, it's something that they need. You have to have nickel for this electric vehicle revolution to happen. And there's only so many really large known deposits, in the world. So, it's just kind of nice right now to be, a bit of the belle of the ball. So, I can see a question there. Who would be the potential investor list? Well, I'm not going to give names. However, one of the important components of the potential investor list is battery companies, particularly Western battery companies. The Chinese battery companies have got their supply chain already figured out, and that gives them a competitive edge. The Chinese have been building HPAL projects, in the area of the Pacific known as the Coral Triangle. They've been building projects. Even the successful ones are uneconomic in Western terms, with internal rates of return pre-tax of 1%, 2%, and 3%. Projects that no Western company would build. But the Chinese are building them. They've got a cheap cost of capital, and each one that they build gives them a long-term supply of nickel and cobalt at the cost of production. So they've got a predictable cost structure. So the Chinese battery manufacturers, won't tend to be slaves to, the spot price. If nickel starts trading upwards and starts trading in a very spiky way, as it historically has done. And the Western battery companies are realizing that that competitive edge could be very dangerous for them. So, the battery companies themselves are on the list. Believe it or not, we have been contacted by large automobile companies that contacted us. I think the car companies, actually mining is quite a long ways outside of their wheelhouse, but the interest is there, and I think the realization that they really have to do something. And I'm just looking at some of the questions that are coming up here.
Yeah.
There's a question, the total cost to build is only $30 million. No. The $30 million US will get us to shovel-ready status. That's the cost of all of the site work, metallurgy, engineering, and the environmental assessment that it will take to get to full feasibility with permits. The cost to build this project, we modeled it as built in stages where the first stage is 1.4 billion US. And that takes care of all of our infrastructure, as well as building a mill. The second stage would be another $500 million US to get to full nameplate capacity of about 37,000 tons per year of nickel with a 37-year mine life. I mean, it's just a gigantic project. For comparison, an HPEL project that will get to 35,000 tons a year of nickel, the capex is around $3 billion. So we actually beat HPEL projects on pure economics. And then if you start looking at environmental considerations, it's just there's no comparison. Our project is so much more environmentally friendly than any HPEL project. Richard, there was a question up there, is the 0.22% grade of nickel not very low? It is a low grade, and that is why this project is among the giant undeveloped projects of the world. What that translates into is, that this will never be a project that's at the low end or that's at the very low end of the cost curve. We will never be the cheapest producer of nickel. However, when you compare us to the other projects in the world that are capable of being developed into battery grade nickel, our economics are less bad than theirs. So it's yes, it's a low grade, but you just what are your recoveries? What does it cost to recover that? What does it cost to build a proper tailings facility? What are the trucks cost? How quickly do the tires wear out? What do they cost? If you put it all together, that adds up to your model, and then from that you can hang a financial model. So there's also a question, what is the IRR? I haven't worked it out for today's price. Today's price is just over $9 a pound nickel. At $7.50 a pound, which is what we ran this project at, it was around 4.9% internal rate of return. So another question, what would the economic structure be like with a potential strategic partner? We're basically offering a very simple deal. You can buy a piece of the project, in other words, a working interest in the project, for cash. And the details of that I don't want to get into, but we're looking at a very, very simple structure. Let's see. There's another question here. What would the NPV of a company at our stage? It's just that's an impossible question to answer. What I can say about NPV is that with a project like ours, where where the NPV is very low at the low end of the nickel price, it expands rapidly. And so where we are at $9, and if you get to $10, $11, $12 nickel, the depreciated net present value, and we use a discount rate of 8%. Other people might use a more forgiving discount rate of 5%. But the whatever the discount rate you use, the value as the price of nickel goes higher, the NPV just balloons. It goes up so rapidly that it's almost incredible. And so when I talk about leverage, when I talk about optionality, that's what that means. Is that the value, the theoretical value, the NPV value of this project rises extremely rapidly as the nickel price goes higher. I've got a question. Can I speak more about carbon sequestration aspects of the project? And do I expect these efforts to qualify for carbon credit creation? In the long term, yes, I do. We're not there yet. We're working with a professor at the University of British Columbia named Greg Dipple, and his graduate students. He has been working on passive sequestration of CO2 in silicate tailings piles for about 16 years. Mount Keith in Australia, which is a nickel mine, Diavik diamond mines in the Northwest Territories. So, what they've got in common is, silicate host rocks that will convert to carbonate minerals if you expose them to the atmosphere. And particularly, if you grind them up fine, expose them to the atmosphere in your tailings, they will absorb CO2 quite quickly. Dr. Dipple has developed a methodology for measuring the CO2 uptake in a silicate sand tailings pile. And so to get carbon credits, that methodology would have to be certified. And we're working on that, and Dr. Dipple is working on that. I'm optimistic about the outcome of that, but it's not done till it's done. Question of what's the time frame for completing PFS? Well, we're hoping to have ours done by the end of next year. If we had, and then, full feasibility study, if you gave me the check today, we could be shovel ready 3 years from today, maybe 4 years. And the reason for the hesitation is not to do with engineering, it's to do with the environmental assessment. That's a bit of the wild card in the timing. And it's also a reason, the environmental assessment process in Canada is very rigorous. It's doable. People do build large mines. And I think this mine, because of a number of factors, will ultimately be approved. But our competition, which has worse economics than ours and a much worse environmental impacts, these HPAL projects in the Coral Triangle, they're in countries that don't have this kind of environmental assessment regime, and so that's why that's a big reason why I think that those projects are getting built. They're mowing down, they're strip mines that mow down tropical rainforests. They process the clay and dirt very aggressively, with high pressure, high temperature acid leaches, and typically they're dumping their tailings into the ocean. There's also a lot of erosion associated with these strip mines that gets into streams and ultimately onto the coral beds. And, the materials that are eroded away are not good for the coral. So, plus the HPAL projects are extremely carbon intensive. So that's our competition. We're in a first world jurisdiction, so we say where environmental standards are very high. That's both a challenge and an advantage, in that if we can get this project off the ground, the buyers of our products can be happy about the environmental and social issues around producing our nickel.
Right. Which is, I guess, Jason's question, is the Turnagain mine location in North American continent, is that significant for any reason, and why? Which I guess.
Yes, for the reasons I've just discussed, but also there's a lot of companies that are looking at building gigafactories in North America. And so, it's best to have a source of your raw materials as close as possible to reduce the shipping costs and the scope 3 CO2 emissions, associated with shipping. So, yeah, we're close to home.
There's a question here from Eric. He's asking, on the Lassonde Curve chart, the inflection point at the end of the orphan stage was approximately 2 years before the mining begins. Is that time frame a realistic expectation for a project as large as Turnagain?
I think that 2 years is very much an approximation, and it very much depends on the project. I think in our case, it won't be 2 years from an inflection point to producing. I mean, our construction schedule alone will be 2 years. And as I say, if we had the money and everything goes well, we could be ready to start construction in 3 years. So, our inflection point will be when we attract a strategic investor with enough money to develop this project properly and quickly. The best case scenario is that we could be in production in 5 years, and that's just the nature of the beast.
Great. Yeah. Another question from Eric is, are the permitting timelines the same across of all Canada's provinces?
I'm not sure about that. There is variation province to province. The provinces are responsible for natural resources in the province, subject to there's an overarching federal environmental review process for larger projects such as this. So in general, I'll say that in British Columbia, it's very interesting. We've got an NDP government here, which is a left-wing government that's very interested in environmental matters. And some people, shy away from that. I don't. We're very engaged with this government. They're excited, I have to say, about the possibility of producing battery materials in the province. And so, and they're quite excited by the fact that we can sequester CO2 in our tailings. Plus an ultramafic intrusive, which is what hosts our nickel and cobalt deposit, is a basic. And we've done a lot of testing behind this. You're not going to see acid rock drainage from this. So one of the biggest concerns in any sulfide mine is monitoring your acid rock drainage. The sulfides are enclosed in basic rocks, so it's a self-neutralizing thing. And this isn't just theory. We've done a lot of test work around this, and we have yet to detect any acid rock drainage. Now, mind you, that is ongoing. That will be part of the base. Well, it's already part of the baseline data. It'll be also part of our environmental assessment. So, in short, we can be part of the solution. We can be producers of electric materials. We're sequestering CO2. This is not a difficult project for the politicians to like. And I think ultimately, getting permits to construct, there's a bureaucratic process that you go through, but it is also, at the end of the day, a political process.
Right. Wes is asking, is Mike Beck still involved with the company? Because he saw him give a presentation a few years ago.
Yes, Mike Beck is an advisor to the company.
Great. Okay, well, thank you so much, Mark. I absolutely learned a lot, and I hope our attendees did as well. And thank you, everyone, for submitting all these great questions. If you do have any follow-up questions after this summit, the contact information for Giga Metals is on the slide there. You can also find more information on their website, gigametals.com, and I'm sure they'll be happy to follow up with you directly. But just to close out, Mark, do you have any final words?
No, I just want to thank you very much for putting this all together, Dasha. It's an interesting topic, and we'll just carry on doing what we're doing, and we'll see how the world unfolds.